Hello, and welcome back to your South King County Real Estate Update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I'm back here to deliver your local real estate news for June. I'll go ahead and jump right on into these slides because there is a lot to cover today. Okay, so first off, this is your South King County Real Estate Update for June 2023. And June is National Homeownership Month. There are a plethora of reasons why you should become a homeowner, and I would love to go through those with you if you're curious. It's the perfect time of year. It's home ownership month. Let me reach out. Let me know if you'd like to talk about the benefits of home ownership and what that might entail in your journey. And we'll just jump right on into the news here. Seattle area home prices tumble from last year's highs. So I'm trying to stick with a little bit of a theme through the show today. So I will point out a couple things to keep in mind for later in the show as we go through these couple articles. The first thing they really talk about here is median home sale prices. So King County's median home sale price for single family homes was $910,000 in May. And that is down 9% from a year ago, but that is up from more recent months. There is definitely a more drastic decline in some areas than others. Real estate is a very local thing, so look for that local expert in your area if you are looking to buy or sell. These declines underscore how much the market has shifted from 2021 and 2022. This is another point. These 2 years were very different from the normal real estate cycle. And we have seen a correction. Certainly we have seen a correction, which makes sense because the market was artificially overheated by ultra low interest rates from 2020 through early 2022. So here's a look at what's happening on the single family and condo sales for King County. Prices are down year over year, pretty much everywhere, some places pretty dramatically, and the closed sales are down pretty dramatically. So basically, there is no area in which we have median price growth throughout all of King County year over year. But if we look at more recent months, we have come up pretty significantly in all 4 counties, King, Snohomish, Kitsap, and Pierce, from where we were in January, February. So we peaked really, really hard last spring. We shot up like a rocket on home prices and then absolutely crashed after that for a few months. We trickled down actually from middle of the year last year until January, and then we have seen an increase in prices since then. In May, the average mortgage rates hovered between 6.3 and 6.6, and that is significantly higher than we were last year. So the fact that we are seeing lower prices than we were last year, that's just based on these interest rates. Home prices haven't fallen nearly enough to offset the dramatic hikes that we saw earlier in the pandemic. King County's median home price is 30% higher now than it was in May 2019. So this just shows how hard we peaked last year and throughout the pandemic. Home price growth is really strong if you average it out over the past few years. And these high mortgage rates have pushed more buyers towards lower priced homes. So people that need to move, there's people that still want to buy a lot of houses out there, but instead of shopping around maybe the 1.5 million, they're shopping around 900,000. They're just dropping their price points. So those homes at the lower price point are becoming more and more competitive. So some people are getting acclimatized to these higher rates, but for a lot of first-time buyers especially, there's just a little bit more worry than there was before. But shoppers can be pickier. A lot of sellers out there accepting offers with inspection contingencies or home sale contingencies. Buyers have gained a lot of power back in that sense, just because there's fewer people that can afford homes out there, and some homes are sitting on the market a little bit longer. And we are seeing a few more offers accepted with those inspection contingencies, which is great news because the markets where there's no inspection contingencies and everybody waives everything, those are the markets that set up lawsuits for the future. It's just a dangerous practice overall. There's 34% fewer newly listed homes in May in King County this year than there was a year ago. So we're just dealing with way less inventory than we have had. And this next article, King County assessed property values decline as housing market cools. For the first time since the Great Recession 15 years ago, King County homeowners will see lower property values on assessor notices this summer. So this just shows the slowdown is affecting home values and the county's listening as far as the tax assessment goes. Here again, it says from 2020 to 2022, the Seattle housing market saw extreme competition. And we know that just sent prices up during that time period and caused a whole lot of other things to happen in the market during that time period that were unusual. But the local housing market is not crashing at all. But the fact is, it finally kind of peaked, which we can't go up at 20% increase in home values year over year forever. Like that was insanity, right? If that happened, it would cause such a divide between the haves and the have-nots in society, and the people that were homeowners would have a lot more money and power in society, and those that were renters would struggle a lot more. So if we saw home values increase exponentially forever, I mean, that would be really bad for society overall. And the assessor has not finalized values for everyone. They'll come out over the course of the summer. And once you receive yours in the mail, you'll have 60 days to appeal if you disagree with their evaluation. But really, the property values are not necessarily the biggest part of what affects your taxes. It's a lot of levies and things that are approved that are on top of that assessed value. And that makes up about 40% of property tax bills. And that brings us to our Market Stat Minute. Southeast King County, we saw an extreme frenzy in all price ranges under 750K. 750 to 1 million, that's a frenzy. There is just a severe shortage in anything $1 million or less in our market. Overall, including the upper price ranges, we're seeing 75.4% of homes going pending within the first 30 days. That's bonkers. In Southwest King County, almost as hot, 70.7 overall. But yeah, those lower price points, especially that 500 to 750 is extreme frenzy. Here it's up to $1 million. But those lower price points, we are seeing a lot of activity in those lower price points, not a lot of inventory. Those things that are coming out there are getting snatched up right away. The purple line is this year, 2023. This is new resale listings coming to the market. You can see how far we're lagging behind our new listings coming to the market each month. And this adds up. So we have a shortage this month, shortage this month, shortage this month, and it just adds up over the course of the year. We just need more listings to come to the market. These are total buyer contracts. You can see that line is a lot closer to our average because those homes that are coming to the market are starting to get snatched up quite a bit faster. And there's just not a lot to choose from. So those buyer contracts, they're snatching up whatever they can. Here's those two lines overlapped. But for our local areas, we have Kent, Renton, Auburn, and Federal Way represented here. This one is new listings. And you can see since January, we are getting an increase in new listings coming into the market, but it is behind where we were last year. Pending sales, we're pretty close to where we were kind of last fall. But as far as where we were last year, we shot up in January so much faster than we did this year. And we are lagging behind in these pending sales just because of those interest rates and not a lot to choose from. But this one, the median days on market, see how throughout the pandemic, we're cruising along at that like 5-6 days. We shoot up to over 40 days in January for one case, between 35 and 40 days in all categories. And then we just plummet back down and we're back down at that 5-6 days on market. And median sales price, we did tick down pretty significantly from last year, down 8%, 6% overall. And we have come up since January. So you're seeing these down 8%, 9% numbers, but really we are on our way back up to recovery. And this quote was from Bill McBride from Calculated Risk Blog. Median sales prices are distorted by the mix, and repeat sales indices like Case-Shiller and FHFA are probably better for measuring prices. Case-Shiller and FHFA, these stats take a lot longer to come out. So there was an article that came out last week in Seattle Times for February to March numbers, because it takes that long to crunch them and really come up with these really accurate numbers. So a lot of the median prices that are just posted on the internet or on the MLS here, they do not tell the whole story. Headlines, they do more to terrify than clarify. So look at the headlines we've talked about today. Seattle area home prices tumble from last year's highs. King County assessed property values decline as housing market cools. Not really super positive sounding headlines, right? But that's because it's comparing it to the unicorn years. This was from Keeping Current Matters, and I really just thought this term was quite fitting. So during the pandemic years, we just saw a lot of things that we probably won't see any of that again. We won't see the 2% interest rate. So we won't see that frenzied of a market. We won't see price appreciation like we saw, because that was bonkers. That's a once in a lifetime thing. So this is 2020 quarter two to 2022 quarter two. Home appreciation, 7.54% leading into the pandemic. Pandemic, 11, 18. And then in 2022, we dropped back down to 5%. This is for annual price appreciation. Pendings, you can see that we had a lot more pending listings during those years than we did leading into those, and we are now at about 460,000, right in line with what we were seeing prior to the pandemic. Showing traffic exploded during those unicorn years, and now we are still elevated on our showing traffic compared to what we saw in 2017, 18, 19, 20. So this just shows that we are still strong, just not as strong as we were compared to the unicorn years. Median days on market dropped down nationally. We know that in our area, it was like 5-6 days, but nationally it was at 35 days and 30 days during those unicorn years. We're up above 50 leading into the pandemic. And then now we're at 43. So still better on the turnover median days on market than we were leading into those unicorn years. Months of inventory, again, we popped down, and then we're in between those unicorn years and what we saw leading into those unicorn years. So we're still strong on that. So fewer foreclosures. We obviously had a foreclosure moratorium during this time period. So there was way fewer just because of that in general, but we're still at way fewer foreclosures than we were heading into the pandemic. And this is 3 different price analyzations. You can see the price appreciation at the beginning of 2022. We saw that decrease starting in July until January. And now we're headed back up again. So we kind of hit that peak or that trough, I guess, here. And then now we're heading back towards what a normal market will be heading forward. So last time we met, we had a weekly average mortgage rate of 6.35 and a daily of 6.55. And now we are at 6.71, which is actually down from last week. It had risen for the past few weeks heading into that, and now we are just down a little bit. And here we have our daily interest rate of 6.92. So a little bit higher, but there's been a lot of volatility on those mortgage rates in the last month or so. See this hike up and then down, and then so we just have a really volatile market right now. Hopefully things calm down a little bit soon. But here's what we're looking at since October. We had those highs in November, fell until February, jumped back up to March, and then we have we're just going to see a little bit of this up and down heading forward. But I think overall, we're going to see a downward trend throughout the year. I do have my summer buyer and seller guides. So excited that we have our little sunny day guides. These are full of fantastic information that can help you on your home buying or selling journey. So if you'd like one of these, just let me know how I can get it to you. And Seahawk schedules are here. They are in early this year. If you want one, let me know. I will be getting those out in the next couple weeks here. So let me know how I can get that to you if you would like one. And I still have Mariner schedules, so I can throw one of those in too if you'd like. And if you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the real estate market in your area or an area you're interested in, or answer any of these national number questions that you may have, or just, any real estate conversation you'd like to have, reach out. Let's chat. Thank you so much for joining me. I'll be back here next month in July for your monthly South King County real estate update. Have a fantastic month, and we'll see you next time.